Okay, good morning everybody. Welcome to Stockradar Stocks in the Move for another week. Today's date is the 12th of October 2023. My name is Richard Lee and I manage a stockradar.com.au website for you. Okay, I think we need to have a little bit of chat about this market that we're dealing with. Markets go through stages, just as uptrending stocks go through corrections. Always a little bit tricky to deal with, but we have to cope with them. I want you to remember, trading is about being focused and sensible using strategies and trade plans, okay? Attributes include things like focus, discipline and patience, key attributes. Now let's talk about psychology of the market. Okay, let's just imagine interest rates don't go up. The market can quickly make new highs if it wants to. Everyone is quite bearish or tipping a further fall. Just imagine it doesn't happen. The market is in fact only 7% from its highs. The unexpected can happen and often does. Okay, the curveball market psychology delivers. That's what it is. Taking comfort in the current market, media-driven sentiment is not necessarily where you want to be to place your bets at the moment. Be individual and follow your trade plan. I hope you're getting the drift of what I'm trying to say here. I always stick to my strategy because I know it works. No strategy is perfect and will endure difficult stages. I've got 20 years of performance of my market and the current market is very difficult, but I know it will return to the upside at some stage. We do know the market will resume its upward path and we will be there to take advantage of it and not shy away from the opportunity we set ourselves up for. You don't have to engage, but you do need to be prepared. Okay? So the ASX 200 leaders, it holds the guts of the market, the ASX leaders are holding up the market and the guts of the market is falling away. So we've only got a very few stock picks there. Where do you set yourself to be? Ready and prepared. Okay, so we're going to talk a bit about super trends and super stocks today, a little bit about that sort of part of the market, the things that we need to focus on. Okay, so in trading tactics, I'm going to continue the TIR breakdown, putting all those things together. We've got the last part today, momentum, and next week we put it all together. So I'll talk about that a bit later on. But first, let's just get to the top 10 and see what they're saying at the moment. So car sales is at the top, one of our super stocks. We've got ProMedica still holding up very well. And a smattering here, Aristocrat in this consumer discretionary sector, Cochlear in the health sector, which is falling apart everywhere. We've got Paladin, QBE, which continues to do well. Seven Grid's come back a bit. Wesfarmers is holding. And Altium, although it's been a bit of a volatile stock, it sort of bounced a little bit yesterday. So I'm looking for that one to hold anyway there. So car sales is the one I'm really looking at there. That's the top 10, top of the top 10 rankings at the moment. Ranking at 10, making new highs and looking very strong there as well. We'll have a little bit of a closer look at that a bit later on. Okay, so now what I want to get to is to the markets. Okay, so for the Dow Jones Industrial Average, we saw a little bit of a pullback down here. It's had a rally this week. The pressure is obviously down short term. We've got a series of lower highs here, putting pressure on there. And there's some reasonably good selling pressure here. Momentum just holds above zero, but it's sort of slowing off there a little bit. So that's what the Dow Jones looks like at the moment. So it's retreating from its highs. How far it comes back? Well, we're going to have to find out when the buyers decide they're going to come back into this market. And I wouldn't be surprised if they do. S&P 500, similar picture, a little bit of pressure on the down. So we've now got a high low and lower high and lower low situation here, pressuring this area here, which is a fairly good support area there. So we've also got some selling pressure here. We had a big week last week on the volume side. So, it ain't over yet. They're certainly giving the market a bit of a workout after trying to correct this move up recently. Nasdaq's holding better than a lot of them, holding out quite well. So the tech sector's doing okay. A little correction here at the moment. We're holding above the average, a trend line, a bit of horizontal support there. So that looks reasonably solid to me at the moment. Okay, copper, well, it's just a downtrend situation. Lower lows, lower highs as it continues down. We didn't know much about that. Not good for BHP, but there you go. Gold also fell off its little cliff. It failed at R1, probably looking for S1 now. As to what the Australian dollar does will depend on what our gold stocks do. But for the moment, the US gold price is looking weak and moving down to its correctional area. And Brent, all of a sudden, degree of uncertainty has hit this market. We can see here we're having a nice little rally developing here and also got knocked on the head by what happened overseas like this week. But a bit of uncertainty. We've got some fairly heavy selling that's hit the market here. It is holding up around about 83, 84 on Brent. So it's not too bad there. So again, be a little bit careful. We don't really hold any energy stocks, so we're not really playing in that area at the moment. So the uncertainty strikes there, so we're not too sure where we're headed just at the moment there on Brent. Okay, now to our market, the ASX 200. Again, I reinforce this thing. This is a very few stocks hold this index up. The reason it's holding up so well is because you've got some big stocks holding, and I'm going to look at some percentages a bit later on as to what they are. But the ASX 200 itself is going sideways, has done for probably 2 or 3 years. This is flat. We've seen a rally down here. We're finding support again. So it really is an uncertain sideways trading market at the moment. But it can change very quickly if a couple of stocks change their minds. And so we're going to keep an eye on this for the moment. There's a bit of quiet confidence that I have in there. Okay, so the ASX 200, we're going to look at the stock picks now. Again, it's flat this week. We've got no ins or no outs. 31 of 184 items we cover, which means there are only 25 stocks of the 161 stocks going up. So there's 130 or so that we're not even worried about at the moment, not interested in. So those 25 there, and then 6 ETFs there as well. Okay, now the portfolio update at the moment. Now we're looking at the accumulation index being up 8.4% over the last 20 years. Okay, so we're sort of looking at that performance there against this Energizer 5, which is since 2003, which is registering. It's come off the highs, no doubt, the last couple of years, but we're still holding 15.7% CAGR, which is good, and we are 5 out of 5 at the moment. So there you go. Who knows what's going to happen? Conservatives has lost 4 out of 10 this week, so it's come back a little bit. The Energizer 10 stock is 8 out of 10 and looking okay, still at 11.9% okay. Then we've got the 2 smaller ones here, the recent ones, which have really traded through the last couple of years. And although the market's sort of been flat, we've just managed to eke out a bit of profit here, up 5 and up 4% against the market, which is not too bad at all. So we're surviving okay, despite the market being a killer at the moment, and a lot of trends failing and things like that, so stops going off, this sort of thing. We're capturing a few good trends to offset a few of those, but it has been a tough market, no doubt. Okay, so let's get now to the stocks. Okay, so last week we sort of looked at some uranium stocks and the health stocks, which is a really fascinating area. We got these stocks like CSL, Sonic Health, ResMed diving down to the lows of their support, and we've got Cochlear making new highs. So it's a strange market there, but we just follow the trends and the price, and that's what we do. So we hold Cochlear, we don't hold the other ones. Okay, so this week, firstly, what do we do with Qantas? Okay, now this is I just thought we'd look at this one because it's quite an interesting situation we've got here. Let me just get this size up so you can see what we've got here. Okay, so here's Qantas. This is what we happened here. We had a nice little rally developing here. This was back in late 22. It did develop quite nice. It looked like it was heading towards those highs. Then we got this real sideways trading action, nasty sort of trading action, which eventually fell out of bed here. So we got out of this one just in time. We've seen some selling hit, so we're just letting it fall at the moment. S2 is probably a fairly reasonable target down the low $4 area for some support to come in and hold this one. But I think, they've made some placating moves yesterday, but Goodyear is still there for another year, which is not really what anybody wants. I don't know why he doesn't listen to everybody and just go away, but anyway, that's the story. They need to clear the decks there. They've got to restart things at Qantas to build that confidence again. No yield there, no trend. So at the moment we're trend intensity rating of -10. So it really is. You can try if you want, but it's a leave alone for me. I have no interest in Qantas at the moment. I've taken my profit and I'm out of this stock now. So that's where I put there. Okay, so that's Qantas. Okay, now I just want to go through a couple of leaders here we have gone through before, just to quickly look at some interesting situation here. We've got Coles here right down at its little low of its trading range for a while. All of a sudden a bit of support showing. If I just wind this volume up a little bit here, you can see that the selling pressure has been fairly heavy here, but we are holding with a little rally this week that's happening here. Trend intensity rating is -9. It's at a major support level, not to be ignored. It is to be respected, but the trend is down, and that is also to be respected. So we are neutral. We wait until things develop or the evidence builds in our situation. But it's an interesting situation, Coles. It has come down quite a bit. Will the support hold or not? It's held a couple of times there, and looking just an interesting area for you to have a look at. Transurban, we've seen this chart a few times. It's right back down to its lows again. It just keeps holding this area beautifully and bounces off there, but we've had some really whacker selling here. You can see it here, it's really heavy, and now we're seeing a little support come in this week. How long that's going to go on for, I don't know. We don't really want to see trends even below here. It is at -9, the pressure's on, and again, if it holds, that's a really good sign that we're probably going to see a rally back to 15. So we'll just have to wait and see a little bit what happens there. But an interesting situation worth watching. And the other one, of course, is CSL. Go figure, this stock doesn't want to go up, hasn't wanted to go up for years, and it just sits there in this big trading range. It's actually the lower of the trading range. Similar picture to Transurban, Coles. We're seeing this big dump down, big heavy selling, but all of a sudden we've had a rally this week. Is this a sign of things to come? Well, maybe, because this is what happened before. We've had no real trend reversals off the lower of these ranges here. We've just had really sharp spikes up each time pretty well. So that's something that we, history often repeats. So if S1 holds, we may well get a good rally out of there. Anyway, we'll keep that on watch for the moment. So I think the thing about this is we may be looking at gift horse in the mouth of some of these stocks, but you've got to be individual, follow your trade plan, and just do what you think is right. The other one worth looking at is Telstra, which has also come down and finding a bit of support. So go and have a look at that chart, and you can see where we're at the moment as well. Okay, so now we want to get to trends and momentum. That's my strategy. We don't need to worry about the 130 stocks that are going down. Their time will come. For now, we focus on the stocks going up and the opportunities in that neutral zone of trend intensity. That's all we really have to do. Okay, the 130 stocks we're just not interested for the most part. The ASX 200 really is, again, a leaders index. This is why it's so high at the moment and why it could rally up further. That doesn't mean the market's going to go. It just means that these stocks like BHP, which is 12% of the index, CBA, which is 9% of the index, and CSL is 6.5% of the index. Between the three of them, they take up 27.5% of the index, and the top 20 stocks take up about 50% of the index. So that's really where the index is. So, it's why I like to do the bottom-up approach, look at stocks individually. I understand why the index is so high, because BHP's holding, CBA's holding, not far from their highs, so they're good. CSL's been rotating around, hasn't really lost anything for a long time, so that's why the index is so high. Okay, so just to say, back to the trend and momentum stocks. Goodman Group's another one which has been hanging on in the property sector, sort of like a lone soldier there, but it's what markets do. They go through these difficult periods, they go through a nice little break up here, we've got a nice little trend reversal, it broke up beautifully, then we had a couple of months of really difficult period, and that's what markets do. They go through corrective phases, especially after the initial spurt. But now we're seeing a confidence got back into the market and it's rallied again, come back to support, rallying again. It's behaving like a bullish stock, which is what we want to see. So R1 at the moment is what my objective would be until I'm told otherwise. So I've got higher highs, higher lows, higher highs. I have a trend intensity rating at +7. Volume here, we'll just squeeze this up a little bit so you can have a bit of a look at it. It's not too bad, especially on the break, this recent break up higher, and momentum is steady. So Goodman Group sticks out there. Forget about the other stocks, they're not doing any good. You can just focus on the one stock, but don't worry about the whole sector picture, because it doesn't always matter. Okay, now one stock that has been continuing along reasonably well. So some of those prospects, so I just go back again on the trend reversals. Some of the prospects we've had, like Seek, LLC, NEC, Eureka, although they've come back a bit, they're all still alive. If you look at the patterns on the charts, they're all still within their trend reversal constructions. So they're still alive there. And I've also got a lot of stocks now that have come back to key lows, which may also start developing. And look, things like stocks like A2M, Ansell, Coles, as we mentioned, CSL, IEL's another one, NIC, National Storage, Centre Group even, and TCL, well, SHL and TLS are also come back to support as well. So they're interesting situations. There's a lot of stock coming down with a lot of pressure, but I'm just finding the market is really probably going to throw up some opportunities when these markets come down, and there are also some stocks like BHP and CBA that I'm looking for a break up, possibly. So we're sort of in limbo a little bit with some of these stocks. Okay, so now I want to go to the new high, which is QBE, and we've got a little Davis box here that we're sitting on here. We've had a break up here, we found support here, we're resisting here, we're having another shot at the moment. Volume is healthy, momentum is okay. It's sort of softened a little bit as we've gone through this pattern here, but trend intensity is +8, we still remain strong, so that's pretty good for QBE. And we've also moved above a 7-year high there, which is also constructive. So, all the things are good about the stock. That the evidence is weighing on the positive side, not the negative side at the moment, holding the average, all that sort of stuff. So QBE has slowly been working away at trying to make a rally. And if we get a break up here above 16, we may well see an extension of the rally that started down around just below $13 for us. Okay, the other, let's have a look at our two super trend stocks. Car sales, again, trend intensity rating 10, a break up above here. Now we've kicked up to new highs and we've got some great volume here. We've had a really good selling challenge here and this brought the stock down again, but the market's buying it up again. A beautiful pattern for a bull market where these sellers have really knocked the stock or tried to, haven't had much effect, and the buyers are holding it, and that means there's a good demand base for this stock and it's making new highs. So very much on the bull side of this one, longer term uptrend is very, very strong for all those stocks, seed, car sales, rare, and then this one's making new highs, which is positive. Rare isn't making new highs, but it's doing a similar thing. It's actually been quite a good explanation of our normal Stockradar strategy, where we will buy a break. If we get stopped out, we set that new high as our next re-entry level. So we're always on these uptrend phases. If a stock's going to start moving into an uptrend, we always must be on it. So we're prepared to take the risk if our stop and our money management is in place. And here it is. So here we didn't make any money. In fact, we probably lost a bit in this first one here, but now we're starting to make some good money on this second trade here, and we're looking at R1 as a potential objective. And why not? Because it's all performance related as far as price goes. The price never lies, and we can see here again a selling challenge here. Some nice red bars here, pushed it down and not a lot, but the buyers have brought this one back up again. So it's a fairly healthy picture as far as I'm concerned. Workouts happen, things happen. Again, perfection is not what I'm looking for. I'm looking to make money. So even I think I mentioned a stock a few weeks ago like MMS, Macmillan Shakespeare, which made a huge new high. Looked fantastic. It was going to go to the moon and back, and it came straight back. Now that will happen, but the matter is to be able to recognise when you're wrong and chop out and preserve that capital, because you will take losses, but make sure they're always small and always be in the opportunity for light car sales when they do start to run. So that's, it's a bit about how you manage your money in these situations. Not everything will work out. You just need to accept it and move on. Anyway, Rare Group, we took a hit here. We got back on it, and we're in with this one. Its trend intensity rating is +9, and we're hopefully looking for about 177, which is the old highs there, and that would be nice if it happened. Okay, so that's QBE, car sales, rare. The other prospect we've got here, which we've walked, and it just keeps lurking in the winds here, which I really like the look of this stock. The way it's performing, it's had a fast rally up here. We had no trend reversal here, so we couldn't really get onto this one. That's no matter. We just wait for the new high, because that's what the next opportunity is going to be for next DC. Trend intensity rating is -1, but we've seen here it's come back from these highs. It retraced from these highs. It didn't break through. Bit of selling pressure. Not a lot. It's been withstood pretty well, and we've had a good rally this week. Momentum is still positive, although it's sagged. It's just slowed. That means the upward acceleration is just slowed, which is fine. So we're still looking at this as a very much an alive situation here, up around $14 for a break for next DC. Exciting opportunity, I think, there. Okay, so that's a bit all I've got on those stocks. There are a few prospects there that we're still working on. They've obviously come back a little bit. But now I want to go to a smaller stock, which I've just sort of looked at a little bit recently, which has been behaving very well. It's not one that I cover, but it looks interesting. This is Ramelius Resources, which has had a pretty big downtrend for quite a few years, from about $2.50 down to about 60 cents. Big correction. But then it started to do the normal thing of finding support, and we built our evidence, and then we eventually got a little trend reversal pattern in here, and we got an alignment of the stars here, where we had volume kicking up, momentum crossing above here. And I'm going to look at this momentum things a bit later when we talk about the trend intensity indicator, because we're talking about momentum today. But we saw the break up here, and again, this is a patience thing. This is what happens in markets, and we do all sorts of things to our mind in these periods. We doubt, we wonder, we doubt, but really take a step back, chill out, relax a little bit. You've got a stop set for a reason, and that's what you look at. So every week, all you do is check your stop against the price. If it's above it, you hold. If it's below it, you get out. And it really is that simple. In this situation here, we didn't get out, and we would have seen new highs here, which is doing at the moment, and looking quite interesting with the volume kicking up, momentum kicking up, trend intensity is +10. Ramelius Resources Resources looks like an interesting stock for me, and we've seen a good reversal of this trend, constructive. Now we've got high highs, high lows, high highs occurring, which is fantastic. Okay, so that's most of the stocks I want to go through. I looked through about 20 lithium stocks the other day, and I know there's some opportunities in there. Not so much in lithium, but perhaps how it's used and how it's what the technologies are for getting it out. And that seems to be changing. The only two I can see that were looking on an uptrend were AZS and MEI. So you can go check those out again if you like. But most of the other lithium stocks weren't looking too healthy there. So we've still got prospects of Paladin's broken up. Telex's Pharmaceuticals is looking very close. And we've got some good current stocks. Still 7 Group, which has come back quite a bit, so we're going to watch that one there. Austin Brokers, Pro Medicus are all doing okay there. Okay, so that's really most of the stocks I wanted to go through. Just want to talk about, we talked about super stocks, super trends was car sales and REA, and now I want to talk about, just briefly, the super stocks we talked about, which will be BHP and CBA, and why index is so high. And if just a simple picture here, BHP is currently $44.73. The high price is $50. Not far from the high. We've got a very, very strong upward push coming from here. The sellers are resisting here, but really, and again, we know the volume, which we can't really see there. There's plenty of middle range buying. It's not telling us anything there, and this is neutral, so we really are in a standoff stage. Trend intensity rating for BHP is -3 at the moment, but it wouldn't take much for this to take the highs out. There you go. Crude's not so good. Well, crude doesn't really affect it much anymore. Copper's very weak. Iron ore's been fiddling around quite a bit, trading around 120 or just below. So, there's not a lot of kicking been going on there, but the price is holding up incredibly well. BHP is a world-class commodity company. That's the bottom line. Okay? All right. The other world-class bank is Commonwealth Bank. No matter what people say about margins and profits and whatever else, market shares, this stock is in demand and always has been. When the price tells me different, I will listen to it. But at the moment, if you look at the CBA price compared to the Westpac price, it's a no-brainer. Okay? So CBA, again, is $100. It is $10 off its high. Okay? So it's 10% off its high. Not far. Again, a little bit like BHP, we've got a mixed volume rating. We've got a neutral momentum rating. Our trend intensity rating is neutral at -3. It wouldn't take much to push this up. Imagine if you've got BHP and CBA making new highs. What would the index do? Probably go up. Okay, so the rest of the market might be a bit different, but that's really where you're focused on with those stocks there. Okay, so I just thought I'd look at those super stocks because they are really a big part of our market and what we've got to do and why things are looking not too bad. Okay, so let's just go quickly to trading tactics, and I'm really talking about the momentum index now. Now, if you want to look at the trend intensity indicator in full, you can go to the About section. It's in the free part of the website. It tells you all about the trend intensity indicator, why it was built, how I built it, and what its purpose is for. Today, I just want to look at the momentum breakdown. I think I said to you there were 6 variations last week. There are actually 8 variations, but really 4 are bearish and 4 are bullish, and it's really only the bullish one that I'm looking at. And if we'll look at the Ramelius Resources situation in a minute, but the moving average convergence divergence has 8 attributes. Now, if I look at the most bullish, I just would see my MACD lines above 0. The histogram will be rising and will be also above 0. Okay, and there are different variations which you can work through there, and you can see what I'm doing there. But if we look at this here, all those different variations here, these are degree of bullishness and degrees of bearishness. So the weakest bearish signal to the strongest bearish signal, the weakest bullish signal to the strongest bullish signal. And so it's a breakdown, and there can only be one answer out of any of those 8 on my momentum index. So it's easy for me to calculate. I'll talk a little about how I bring it all together next week. But that's really what I'm looking at for the momentum. As you said, all the things I've done, the price, the volume, the moving average, the MACD, are all simple breakdowns of states they can be in, basic states that we know are valid and it's basic, nothing too esoteric or mysterious. So we just break it down at the very basic readings, and we take those readings and value them, and I build it into the index. I'll talk about that next week. So that's the MACD. You can take a snapshot of that screenshot if you want and have a look at it, or you can go to the About section of Trend Intensity or Stockradar and look at the Trend Intensity indicator there. Okay, so I talked about Ramelius Resources. Now, if we look at this one here, and I hope you can see this. In fact, I might go to the bigger chart so you can have a look at it. You can see down here, if we just blow this up a little bit, You can see the momentum index down here. When I talk about alignment of the stars, the MACD line is the most bullish sign. If the MACD line's above zero, the histogram is above zero, and it is rising, which means that the lines are separating and getting wider. That is the most bullish state you can have, and as often when it's crossing above zero, that is what's happening. So that's why I get the trend intensity rating of 10. Trend is up, maximum rating. It's above the average, maximum rating by 2 or more. Volume is expanding, maximum rating, and MACD is rising above zero, and the histogram is also rising. So that's a maximum rating there for Ramelius Resources, and so that's how I arrive at it basically, and it's not really that hard to do. Okay, so that's the momentum index, and they're the components of the indicator, which I've talked about the last few weeks, which will hopefully help you, whether you're doing your own or following me. Just keep to the core of these indicators and what they're really doing. I find divergences very sort of weird and wonderful things. Actually, getting that signal from a divergence is quite hard to know when. You can put those rules in there if you like, but I don't particularly like them that much because divergence of stock can still go higher and the momentum index can be coming down. Okay, that's all I need to say about that one. Okay, so that is basically the trend indicator to follow next week, putting it all together. We'll talk about that, and hopefully you'll get to understand a little bit about, not just about what I'm doing, trend intensity indicator, but how to deal with indicators, how to associate them with the market. You know, we've certainly got a very difficult market to deal with at the moment, but it is a part of trading, and things will change and things will get better, and we'll make a lot of money soon, but it'll just have to wait until we're told. Okay, so as I said before, we can be optimistic if we like, but we really need price confirmation to confirm that optimism. Okay, so just remember, be individual, follow your trade plan with focus, discipline and patience. If you can do those sort of things, you're well on the track to doing the right thing. So ensure you stay safe, respect your trends, listen to your stops, and I'll be here next week to have a chat about some other stocks if I can find for you that might be going up. Thanks very much for listening.